Hey, and thank you for tuning in for the latest stock market news updates. Please press the like button and subscribe so you can stay informed. With that being said, let's jump right into the video. In a week characterized by volatility and mixed economic signals, the stock market surprised investors as major indexes experienced a seesaw effect between morning gains and afternoon losses. The driving force behind this fluctuation was a nuanced jobs report, revealing a slower pace of job growth while keeping unemployment at bay and wages at elevated levels. Last week, investors witnessed the indexes suffer their most significant weekly losses since March, casting a shadow over investor sentiment. However, the spotlight also shifted towards the bond market, where yields on the 10-year Treasury note surged to levels unseen in over a decade. This upward trend indicates investor bets on sustained elevated interest rates, reflecting a cautious optimism for robust economic expansion. Federal Reserve Governor Michelle Bowman echoed this sentiment, stating that additional interest rate hikes would likely be required to steer inflation towards the central bank's 2% target. Bowman emphasized her support for the recent interest rate increase and emphasized the need for evidence of consistent and substantial inflation reduction before considering further rate adjustments. The Fed's recent quarter-point increase in the benchmark short-term interest rate signaled its commitment to curbing inflation. As the Fed approaches its next meeting in September, the extended gap between sessions allows for a comprehensive review of economic indicators, including inflation, job market data, and overall economic health. Although recent data points to a slowdown in inflation and subdued employment growth, the unemployment rate's slight decline and sustained wage growth challenge the Fed's targets. Meanwhile, the housing market paints a contrasting picture, with a severe shortage of available homes contributing to soaring prices and dampening the aspirations of potential buyers. The scarcity has spurred home-building giants like Lennar and KB Home to ramp up production, yet demand still outpaces supply. Existing home sales have recently hit a 5-month low, and prospective homeowners are feeling the sticker shock as the median home sale price stands at $416,000. Which is a significant increase from pre-pandemic levels. The appeal of U.S. homes to international buyers has also waned, with foreign purchases dropping by 14%, reaching the lowest figures on record. The shift towards remote work has driven property searches to new cities, as over a quarter of Redfin's property searches in the fourth quarter were for locations outside the searcher's current residence. Furthermore, historically, low mortgage rates have trapped homeowners in their properties, with over 80% of mortgage holders reluctant to give up their favorable rates. Renters, on the other hand, are experiencing a cooling trend in rent prices, providing some respite amidst the challenging housing landscape. Over 70% of renters believe homeownership is unattainable, even as rent prices slow down after a pandemic-induced surge. The housing market is sending mixed signals as nearly 80% of consumers express reservations about buying a home in the current climate. This sentiment aligns with the hesitancy observed among potential home sellers, with more than half awaiting a potential drop in mortgage rates before making their move. However, Federal Reserve Chair Jerome Powell's recent assertion that rate cuts are unlikely for a couple of years casts doubt on the realization of these expectations. The housing sector remains in a state of flux, balancing economic indicators and market dynamics. In single stock news, we have Google, which unveiled a unique approach to lure employees back to its Mountain View campus. The tech giant is offering a summer special, allowing employees to book a stay at the Google-owned hotel on campus for a discounted rate of $99 per night. This unconventional strategy aims to address the challenges of the remote work model by providing an affordable and convenient accommodation option. While the cost is borne by employees and doesn't qualify as business travel, it offers a compelling solution for those seeking to optimize their work-life balance. Speaking of Google, in a pivotal legal development, a judge dismissed certain claims in a high-stakes lawsuit filed against Google by the Department of Justice and state attorneys general. While some allegations, including Google's alleged manipulation of search results to disadvantage competitors, were rejected, the case remains a potent reminder of the regulatory scrutiny faced by big tech firms. As governments worldwide intensify their oversight of the industry, the outcome of this lawsuit could impact Google's core business and influence the broader regulatory landscape for technology companies. Now, let's talk about some of the best stocks to buy right now, which would include Alphabet, the parent company of Google, which has recently broken into a buy zone, surging past a critical cup-with-handle buy point of $127.10. Supported by a near-perfect IBD rating of 98, Google stock finds itself in the top 2% of tracked stocks. Analysts are bullish on the company's future prospects, projecting a 20% surge in earnings per share between 2023 and 2024. Marvell Technology stock is also a good stock to buy, as it is striving to overcome a $66.81 buy point from a cup-with-handle pattern, accompanied by an IBD rating of 86 out of 99. While the relative strength line has maintained consolidation, the stock's performance ranks within the top 5% of price performers over the last 12 months. Visa stock should also be on your list as they exhibit resiliency by forming a 3-week tight pattern within the buy zone, with an official entry point of $245.37. Bolstered by an all-around IBD composite rating of 86 out of 99, Visa's steady earnings growth and performance dynamics warrant close observation. You should also pay attention to Oracle stock because despite a fraction below the 50-day line, Oracle maintains a robust IBD rating of 91 out of 99. Positioned within the top 8% of price performers over the past 12 months. Therefore, ORCL's market performance underscores its potential significance. And then, I would personally recommend that you look into Mercado Libre stock, because they are the largest e-commerce company in Latin America. Mercado Libre has reclaimed its 50-day moving average, presenting a buy zone with an entry point of $1,257.66. In penny stock news, you should know that Tupperware Brands, a stalwart in the household products industry, has embarked on a dramatic journey of resilience and resurgence after facing the brink of delisting due to plummeting stock prices. The 77-year-old company's revival, fueled by unexpected factors and shrewd investments, showcases a comeback story that distinguishes itself from the speculative spikes seen in meme stocks. Tupperware experienced a surge in sales as households embraced cooking and storing food at home. However, the euphoria was short-lived, and Tupperware faced a daunting challenge as its stock price dipped below $1. Faced with the looming possibility of delisting from the New York Stock Exchange, the company found itself at a critical crossroads. But then, a remarkable turnaround began. Savvy investors recognized the potential in Tupperware's distressed stock, marking the beginning of a significant rebound. Last month, penny stock enthusiasts, along with investment powerhouse BlackRock, injected renewed confidence into the company's prospects. As a result, Tupperware's stock, which had bottomed out at a mere 61 cents, soared to around $5, offering impressive returns for those who seized the opportunity at its lows. While Tupperware's resurgence shares some similarities with the meme stock phenomenon, market analysts are quick to differentiate this resurgence from the speculative spikes witnessed in stocks like AMC and GameStop. Rather than a fleeting internet-fueled rally, Tupperware's trajectory is being likened to a trend observed in recent times: a strategic acquisition of stocks of companies undergoing financial distress, colloquially referred to as a bankrupt stock buy-up. This phenomenon suggests that informed investors are capitalizing on undervalued stocks with growth potential, akin to the strategy undertaken by Berkshire Hathaway. For broader market developments, Berkshire Hathaway's solid Q2 performance offers a beacon of stability. With operating earnings experiencing a 6.6% jump, the conglomerate's cash reserves have ballooned to an impressive $147 billion. This financial prowess serves as a testament to the conglomerate's ability to navigate market challenges while capitalizing on growth opportunities. We also saw Cathie Wood and ARK Invest make some strategic transactions. While the investment entities sold shares of their DraftKings stock, they simultaneously acquired shares of Block stock. In other news, investors should be aware that PayPal has launched a US dollar stablecoin, aptly named PayPal USD. Backed by US dollar deposits and short-term US treasuries, this stablecoin aims to facilitate the adoption of digital currencies for seamless payments and transfers. Designed to mitigate the wild volatility often associated with cryptocurrencies, stablecoins contribute to the evolving landscape of digital financial transactions. The financial landscape is a complex tapestry woven with sentiments, strategies, and market forces. From housing market dynamics and innovative corporate strategies to the intricacies of tech stock analysis, each facet contributes to the evolving financial narrative. As investors and market participants navigate these multifaceted developments, informed decision-making and a keen understanding of market dynamics remain crucial for capitalizing on the opportunities presented by this ever-changing landscape. With that said, I wish you happy investing.